amount of distributions can I take from my business? We get this question a lot from our clients. Welcome to Taxes Simplified. My name is Ashley King from KB Tax Advisors CPAs, and I will be your host today. Today, I will be reviewing with you S-Corp shareholder basis and how it affects the amount of distributions you can take from your S-Corp business. Now, let's start with what is shareholder basis. The simplest way to explain shareholder basis is the amount of money that's going into your business and the amount of money that's going out of your business. Some things that increase your shareholder basis are owner contributions. That's money that you're putting into the business from your personal funds. Your net income. Tax-exempt income, such as forgiven PPP, grants from the state and the IRS, and interest income. Some things that decrease your shareholder basis are a net loss from the business. Your owner distributions, so that's money that you're taking out of the business other than W-2 wages and personal expenses being paid out of the business. Also, charitable contributions and non-deductible expenses will decrease your shareholder basis. Now, why is shareholder basis important? So per the IRS, a shareholder's basis can never go below zero. So if a shareholder takes distributions in excess of their basis in the business, those distributions then become taxable to the shareholder. We want to make sure that your distributions are non-taxable to you. So it's very important to keep track of your shareholder basis throughout the year so you can be intentional about the amount of distributions you're taking from your business. So how do you keep track of your shareholder basis? Let's go over a really quick and easy example of how to do this. So let's say at the beginning of the year, your shareholder basis is zero and you contribute $20 of your own personal funds into the business. Your basis is now $20. Now let's say at the end of the 2022 tax year, your net income is $10. Your basis is now $30. Now let's say you made a $5 charitable contribution out of your business. That's going to decrease your shareholder basis, leaving you with $25 shareholder basis. What that means is now you have $25 available to take as distributions from the business without being taxed on the distributions taken. Now, shareholder basis computation is much more complex than the simple example that we just went through. So it's very important that you have your accountant keep track of your shareholder basis, if not on a monthly or quarterly basis, then at least annually. This way you can be intentional about the distributions that you take from your business and prevent you from being taxed on any of the distributions that you're taking from the S-Corp. Now, one thing I want to point out, if you prepared your own 2021 personal tax return or you reviewed a tax return that somebody prepared for you, you may have noticed that there was a Form 7203 that was required to be filed with the tax return. So the IRS Form 7203 is the shareholder stock basis limitation worksheet that the IRS is requiring all S-Corp shareholders to file with their personal tax return. This is allowing the IRS to determine if shareholders are taking distributions in excess of their basis, and if so, are the shareholders paying taxes on the distributions in excess of their basis in the business. So now more than ever, it's very important to keep track of that basis and to be intentional about the distributions that you are taking from your S-Corp. I hope this has been helpful. If you know any other business owners or individuals that this could be beneficial to, please share this video with them. Thank you for your time. We really appreciate it, and have a great day.